Hi, in this video we are going to create a stock screener that is somewhat more realistic using Equities Lab. We're going to click the Create Stock Screener button and go to Editor as usual. We will create a 0 to 10 price earnings ratio screener. We will also add a price to book ratio. We want to keep that between 0 and 1.5. The price to book ratio between 0 and 1.5 has been a pretty decent screener for value stocks as well. We will also add in a dividend yield screener that we want to keep between 3% and 10%. Just make sure to keep it in decimal form. There we go. And once we have that all set up, we will go ahead and run a back test, ensuring that we set our time frame for 10 years and click the run button. After the data is done being processed, we have our normal graphical display. Here, where we're going to change things, we're going to go over here to this new tab button, and we're going to add in a new tab, and we're going to call this one restrictions. You can of course name this whatever you like. Click OK, and the tab will be right here next to your editor tab. So the restrictions that we're going to add here today are to keep things at least somewhat realistic. So we're going to add a market cap restriction, and we're going to keep our market cap above 500 million. That way we can weed out some of these smaller companies that have a tendency to fail. We're also going to make sure to avoid our financial services companies. So what we have here is not classify as financial services. And again, the reason we want to do that is to avoid the strange accounting that goes on when it comes to financial services companies. Another thing that we want to avoid is American depository receipts. These are basically foreign companies that trade on domestic markets, and for the same reason that we want to avoid the financial services companies, the accounting is sometimes not in line with what we are accustomed to looking at, and so it can really skew our decision making. Now, this is a little bit redundant, but it's just a reality check, keeping the price-earnings ratio between 0 and 10. Obviously, in the editor back here, we've already set up our PE ratio to be between 0 and 10. Here, we're just being a little bit redundant and saying 0 to 20. From there, we're going to say that we want the closing price to be greater than $10 a share. And this is going to weed out any of our penny stocks that might creep into our data. Additionally, we want to add a liquidity control. So what we're going to do here is we're going to say min x within n days. We're going to use this function. So we're going to say that there's a minimum of a certain amount of volume times closing price within 10 days. And we want to say that this dollar volume within the past 10 days is at least $1 million. That way, if we have to, we have some sort of reasonable assurance that we can get out of this position. Finally, we're going to set up one more fail-safe here, and that is just simply saying that our dividend yield is no greater than 100%. Obviously, you can't pay out more than what you're making in the year and expect to remain profitable. And again, it's a little bit redundant because if we go back here, we can see that our dividend yield is well within those parameters. So once we're done with that, we can go back to our editor tab. And in our editor tab, we are just going to add one more screener, and that screener is going to be restrictions, the tab that we just made. We will click the Go button and run the data. Once the data is done running, we can see that we have a graphical display here. And it's obvious that this has decreased our overall results, but it's done so in a manner that weeds out a lot of potential risk and maybe some things that aren't necessarily good for us. We're also going to go over here to trading rules, and we're going to change our rebalance from weekly to quarterly. So over here you have all sorts of options about when you can rebalance and choose whatever you want for your particular strategy that you think will optimize your returns. And we will run the back test one more time. And here we have our results. We're also going to add in one more tab to kind of fill things out. We're going to call this tab plot number held. That way we can add a little more information to our graph here so we can see exactly how many positions we were holding at any given point in time. So number of held positions, just hit enter, and then once we've done that, we can again run our backtest. Now that our backtest is finished running, we can see here on the right hand side we have another scale. It's our number held scale, and this particular range is from 0 to 50, and you can see this line here shows you exactly how many different stocks you held at any given point in time. And if you click on the line, as if you clicked on any of the other lines, it gives you some more detailed information. So on May 27th, 2009, we held 44 different stocks, which makes sense because the PE ratios in general and price to book value ratios were very low at that point, thus falling within the parameters that we had set earlier. Another useful thing when you add these parameters to your graph, you'll also find them listed in the backtest table. So here you can see we have this number held position 0, 1, 4, 3, so on and so forth. And so that's useful also if you're trying to export this data and maybe run some other tests on the data to see what's been going on with your particular strategy. So this is a fairly realistic stock screener. It screens out for a lot of the problematic stocks that may pop up with a normal screener. And of course you can change or modify any of these parameters, add some, take some away, depending on what your particular strategy might be. So play around with that and get comfortable with what you can do, and we'll pick up from here later on.